Thank you. That was quite an intro. Good morning, everyone. It's great to be the first speaker of the day and talking about a topic that is very current about stablecoins, what's happening in Web3 and all of that, right? So glad to be here. Just a little bit about Animoca Brands, a bit of statistics for us. What we've been doing is in the gaming space and then more and more into diversifying into the whole altcoin space. So we look at ourselves as an altcoin accumulator, right? So asset accumulation is part of what we do, and it's very, very current in terms of what's happening in the digital asset space. A lot of treasury companies right now as well. We are actually an operating company as well. Some people put us as a fund. We're not a fund. We actually operate. We do have 600 investments or so. We're 4.3 billion in assets, about 300 million revenue. We're actually one of the largest non-crypto exchange companies out there, and we've been doing it for a number of years with what we call triple-digit, millions in revenue, and always shifting and innovating the whole time. 16 projects incubated. We're 3 liquid tokens, right? Sandbox, Sand, EDU, Mochaverse, and of course we've launched plenty more. Almost 600 companies in portfolio, and tokenization services is also what we do. Sort of an asset accumulation, we do direct investments. We have I think in 2014 alone, about almost 100 investments. We made more this year, and we don't stop, right? Because at the end of the day, we look at the space as a evolving one, so you don't just sort of like look at the market and see what's going on, and then you stop investments. You just keep on innovating, keep building, and keep investing, right? And of course, we have tokenization services. We're advisory business. We do market making ourselves. We do no operations. We're really across the space because at the end of the day, we look at ourselves as one of the innovators of this space, and by doing that, we are at the cutting edge and therefore have the relationships with a touch of the finger, right? And we have some prominent Web3 projects. Most of you have heard of Sandbox, Mochaverse, Gamey, Open Campus, again, listed on liquid exchanges. So again, I'm going back to, as I go into sort of what's going on in Web3, especially in Hong Kong right now, we have to rehearse a little bit about what is our purpose here, right? We're here to enable digital asset ownership through reading, writing, and owning through the blockchain, right? So again, if you look at sort of what Web 2 is about, again, just rehearsing the purpose and why we're here, these are all closed networks, right? Huge closed networks. And why you're all here today is because we want to have the future of connected networks, right? Through sort of what a map ought to look like is sort of decentralized, connected networks that are ultimately going to be permissionless and is not subject to sort of data mining and all of that without your permission, right? So that's sort of the basis where we are. And I want to turn to Hong Kong a little bit because WOW conference has been here for a while in Hong Kong. And we do believe that the Hong Kong government is going after the space, but in a lot of ways, there are really 2 ends of it. One is what we call the native space, right? The other, what I call the institutional space, and the government focuses a lot on the second part, which is sort of like new tech, existing industry, what I call institutional space, right? But it cannot exist. The innovation comes a lot from what I call the new tech, new industry space, so the native space, right? That's where all the innovation comes from. At the end of the day, Bitcoin has been around for such a long time. It was the innovation at the time, and thereafter, a lot happened since then. And we go into sort of like the plethora of companies and innovation around the native space. There's really, really a lot out there. And we cannot just say that we're only going after institutional space. Then you're doing a little bit more of a Web 2+ thing. It's not that you don't go after the space and sort of evolving what the financial landscape is doing, but there's a lot of innovation going on. A lot of investments, yes, a lot of speculation as well, but in every early stage tech scene, right, even in Web 2, there's always going to be over-investment. Some companies will work, some companies will not, but that's where innovation takes place, right? And our way of looking at it is sort of like, if you want to build an ecosystem in Hong Kong, which is critical for us, you need a native space, right? So what you need to do is attract the giants to come here to be in Hong Kong. Now, Hong Kong sort of had a head start, if you will, right? In 2022, the government has announced that it wants to go after the space. Then FTX blew up, and and then the government got a little bit sort of scared, a little bit away from what you call the native crypto space, a little bit more in the institutional space. But there were a lot of interest at the time because the US was so narrow and not open to crypto companies. A lot of interest was coming to Hong Kong. Now you're competing again, right? And again, for us to develop the space, we need to attract the anchor tenants into Hong Kong, make sure they develop and build here. Otherwise, you don't get the ecosystem, right? So again, if you want to talk about the space that is institutional, there's plenty available, right? So again, just looking at Hong Kong's different pillars, right? You do financial services, consumer retail, and tourism being core pillars of Hong Kong. You can obviously innovate around what you call decentralized ledger technologies, DLTs, and implementing that into Hong Kong and transforming it. And of course, now RWAs, there are a lot more sectors available, right? If you deep dive into sort of like even just, financial services, payments, RWA tokenization, trade finance, lending, obviously a lot of DeFi applications are available. These are very obvious, right? One of the clear use cases that has been sort of timeless in the Web3 space is really decentralized finance, right? And decentralized finance ultimately is rebuilding the infrastructure of finance, right? And it's taking hold today via sort of stablecoins, right? And you guys would see there's a lot of speculation going on, right? Even in Hong Kong. And this is stuff that's becoming pretty sensitive. And if you look at sort of like, this is an old slide, I didn't bother updating it. It was kind of like, a week after sort of like people started to talk about the stablecoin euphoria. And you just look at companies, right? Listed companies that are announcing that we're touching on the space, we're going on the stable coin. You already see that kind of like a price movement, right? And this is very concerning to the likes of HKMA, et cetera, because it's over-speculated. Now, this is all fueled by what? It's all fueled by the Circle IPO, right? Actually, when we were in the space talking to different bankers, talking about Circle IPO, the anticipation of the bankers at the time actually analyzing discounted cash flows, they weren't quite as bullish, right? Well, but when it came out, there was a lot of retail interest in this, and therefore equivalent in Hong Kong, you see the same kind of speculation. But the reality is that it might not be as great of a business as you see. But this is a year of stable coins, right? You can see many of the big brands, right, brand names going into this space, right? You see Visa, Master going into it because it's a huge disruptor, right, to its business, right? You see Meta, Ripple, obviously Moonplay, ourselves, Animoca brands with a JV of Standard Chartered and HKT as one of the aspiring licensees, et cetera. And you can see that it's just a lot going on in this space, right? So what is it? What is going on here? And some of you will know this already. What is stablecoin? Stablecoin ultimately is a one-to-one backed asset that will be issued on a blockchain, utilizes the currency. And what does the issuer actually do if we get a license, right? So ultimately, a buyer would have to transfer its fiat into the issuer. The issuer has some back end, right? It will need to do AML KYC because this is a regulated space. It has an issuance redemption platform. It has reserve management, and the reserve gets allocated into an investment portfolio. Again, unlike the likes of Tether, it needs to be regulated, and therefore custodian, what kind of assets are all regulated, and you need to tell the HKMA, what you're investing into, and then all of that is it's highly regulated in the sense that what is the redemption period and all of that, how do you deal with crunches with respect to redemption and all of that, and then stablecoin gets minted. Right? It's really simple, but the fact that this is regulated is very important for the space to grow because this is the infrastructure that ties the native space, the blockchain space, into the traditional finance space, right? So this is the big infrastructure that needs to be built. And if you look at sort of like the whole landscape of stablecoins right now, it's 99% US dollar, right? Now, people were asking, right, why is Animoca interested in a Hong Kong dollar stablecoin in the first place, right? Well, because in this part of the region, it's pretty important that we have Hong Kong dollar assets is pretty large. And geopolitically, right, this Greater China needs to have its own monetary sovereignty, right? And if you look at sort of what you call asset price discovery overall, and looking at sort of like the international flows of investments, you might argue that US stocks are very highly valued, and maybe some Chinese stocks are a little bit more undervalued because of institutional flows, right? Again, if you connect the whole asset space onto the worldwide blockchain, this price discovery will be very, very different, right? Now, the question is, if we don't go into this space, right, if Hong Kong doesn't go into it, what is the relevance in the blockchain-based RWA world with dominant US dollar stablecoin being the dominant currency? Literally everything can be done in the assets can be based in US dollars, and you no longer, and your countries and your domiciles currency is no longer relevant, right, from that perspective. So therefore, every domicile would need to go after stablecoin in its own way to ensure that its assets and its own stock markets are relevant, right? So non-US dollar stablecoins are actually very, very important. If you look at sort of use cases, right, people are saying that, well, only US dollar matter. That is not the right way to us to look at the space, right? Because everything has a beginning, right? The killer app, obviously, right now is stablecoins because it enables the RWA space to take place. But you look at sort of what we call the other use cases that's rising. It's definitely, you can see that the trends are about payments, about settlement, cross-border settlement, all of that. And there's a lot of use cases, right? So if you look at sort of crypto trading as a first use case, you look at on-off ramping P2P payment as now what's being adopted by even SMEs, right? Then you're looking at like B2B payment, tokenized MMF, like the BlackRocks of the world are getting into that already, cross-border, cash management. Then you're going deeper and deeper into it, right? 24-hour liquidity and foreign exchange markets. It's not 24/7 today, and why shouldn't it be, right? Because it's not like that everyone lives by banking hours by convention, right? And then you have other tokenized assets, collateral management as well, right? If you think about off-hour trading, how stablecoins can enable collateral management, and sort of like think about reduction of credit risk, and a lot more, right? So there are lots of use cases. So when people are asking, what's the use case of Hong Kong dollar stablecoin? We don't even know where to begin. There's just so much of this stuff going on, so much of this 24/7 programmable money, payments, money market funds, enablement of RWAs that can happen via this, right? So, but you got to have a start because adoption takes time ultimately, right? So if you sort of look at sort of what Hong Kong is doing, Hong Kong is actually super proactive, right? It's been looking at stable coins, or start with CBDC, right? As you guys know about the ECNY, sort of with Project Ambridge, and then Hong Kong dollars, which is not launched yet. And then Project Ensemble is really about talking to commercial banks about tokenizing their deposits, right? But the one thing that we believe will have the greatest adoption and widest adoption is going to be stablecoin for the reason that it is on public blockchains, because that is what connects the world together, right? So you can see the pros and cons here. But if you look at sort of like, what an issuer could potentially do, it can really use a lot of distribution. When you think about adoption ultimately, how at least we think about it is that you don't have to do everything yourself. You don't have to directly go into sort of retail use cases directly. First of all, we can distribute through distributors, right? And as long as we're compliant, then you can see the enterprise use cases and retail use cases to really spur that adoption. And initially, you want to go after big flows, so you go after enterprise use cases, right? You get traditional banks, brokers, you get digital banks, crypto exchanges, so you just make partnerships ultimately, right? And share your economics with these guys, right? So again, initially, you can see, I'm not going to repeat all of these payments, remittances, et cetera, right? And one thing that people does not talk about is that obviously stablecoins economics is about clipping the interest rate, right? But when you're doing distribution through payments, et cetera, you do have to share that income, right? Same with what Circle does, right? So this is a scale game, right? It's not like when people are saying that, oh, as a listed entity, they go into stablecoin, they make a lot of money. It's not really true, right? This is a scale game ultimately. And again, people are asking, what does this all mean, right? Is this blockchain money taking over the world? We don't really look at it that way, right? We look at it as sort of like, cash still exists, right? Most people don't really, in China at least, people don't even carry wallets anymore. You pull out a piece of cash, people stare at you like you're crazy, you're funny. So there's contactless, and it becomes digital wallets, right? WeChat Pay, Alipay, Tap and Go, et cetera, and it allows you to do investments as well. And thereafter, you think about sort of what blockchain money ultimately is that you have seamless 24/7 connectivity with, 10 Hong Kong dollars in your wallet, you can start investing. And the payout in terms of the investment returns can be done on an hourly basis, even by seconds, right? Doesn't have to be settled by day, right? This whole world is about to change because of blockchain money, programmable money. And it's the first rail is through stable coins, right? I'll end with this, right? I don't actually feel that everyone needs to be an issuer. And that's one of the misnomer, right? And we have 4 reasons for it. First of all, is about commitments, right? If you sort of like think through a scale game and really thinking through the economics of it being scale, you need to have adoption. You need to take losses for the first couple of years, right? Before adoption happens, right? And then you need core banking capabilities, right? Because that's why we partner with Standard Chartered Bank, because you got to understand what KYC, AML, CTF ultimately is going to be about, right? And then companies thinking that, oh, we have a lot of use cases even internally, you don't have to be an issuer, you can adopt it, right? So, the benefits of using a stablecoin is different from sort of running a business in stablecoin, right? So again, the last point is about how you regulate business at margin at scale, right? We don't even know if the economics will be favorable. We don't know how many licenses will be issued, right? But at the end of the day, the HKMA is saying that it will be a few, right? So that's what we'll go with. And to build the ecosystem well is Hong Kong's job, HKMA's job. It's very, very important for Hong Kong to do this well, right? As a capital window to China. So that's all I have to share today. Thank you very much.